Oh, hey, what's going on, everyone? So today I'm going to go over what CSD is within trading. And before we go on any further, again, I am not a financial advisor. Everything that I'm showing you is for entertainment purposes. It's just what I've learned throughout my own journey. So, what is CSD? CSD stands for Change in the State of Delivery. And CSD is probably one of the most powerful confirmations within smart money trading. It's pretty much kind of like a market structure shift, but it's similar, but kind of, there's similar way to kind of define it. Um, so CSD allows you to identify when the market is either going into a buy program or when it's going into a sell program. You, for me, it allows me to identify the early stages of when this is going to happen. So this can tell you kind of how where your bias is going or how everything is shifting. So in front of you is my ugly drawing. So this is considered an order block. So this is your bearish candle, and this is your bullish candle. And if you hear me cough, sorry, I'm just getting over a small cold. So a lot of people see these, and then you can identify this normally as an order block, right? Whenever there's three ways to identify CSD. One, inverse fair value gaps, breakers, order blocks, or a mixture of a inverse fair value gap with a breaker. To me, I use order blocks. It's pretty much how you start identifying through the shift of candles. So this could be any time frame, okay? Just for example, this is an we'll think of this as the hourly time frame. You see this bearish candle and then this bullish candle on the following hour closed above it. And it closed bullish like this. This automatically tells me, oh, you know what? This is flipping to bullish, right? So then the next candle, we know there's probably going to be a retracement. So let's say on the hourly candle, then you'll get that retracement. It'll touch the order block, and then the next hour, you're going to end up getting a bullish candle. So we closed above. This candle closed bullish above this one. We already know this is CSD. These are the early stages of changing the state of delivery. And then more than likely, you'll see another bearish candle come touch the order block, and then you'll see distribution again to go back out. So how does that work, right? We've already, if you look at my other videos, I've showed you what to look for. So this could be your external liquidity. So once we retrace into this order block, then on your smaller time frame, it's gonna probably look like this, right? Come here, you see the CSD. So basically, what you want to do, you're in your hourly time frame, you're gonna identify the shift right here. You'll look for CSD within this area here. So you'll see the hourly time frame. You'll um, drop to your hourly time frame, and then you'll see CSD here. Enter, and then target your external liquidity. So let me just, before you, I'm going to show you some examples, but I'm going to just do a quick, brief reminder of what we look for. All right. How to identify once we go from a sell program into a buy program or vice versa, how to identify when we're, okay, sell program to buy program, when to identify when we're in a buy program going into a sell program. Either one, right? So the previous video, we went over PX low, PX high, right? X is a variable that you can change. So this can be a previous 90-minute cycle high and a previous 90-minute cycle low. Again, let me change the colors on these real quick. Um, so again, we purge, right? So we purge a previous 90-minute cycle low. We're going to target a high. Same thing. What else do we look for? We look for sessions. We see an Asia low get purged. We know it's going to go for a high, right? What's another thing? Previous day. We purge a previous day low. We're going to go for a previous day high. What's another thing? A previous week low. We purge a previous week low. We're going to go for a previous week high. That's how we start identifying these market maker models, right? Another thing is POIs. If you're targeting 1 hour POI, you know we hit the internal range liquidity, then you want to target the external range liquidity. This is how you start identifying when the program, the algo goes into a buy program or when it goes into a sell program. So um, let me show you some examples. So today, again, just as a reminder, not any financial advice. I'm just giving you stuff that I've learned, okay? So here is the previous week low, Monday, and what was the previous week high, right? Previous week high is Wednesday. So you highlight those. Here, we've already swept this liquidity. We sweep this liquidity, and Nasdaq hasn't done it. But if you look at ES hasn't done it either. Then look at the Dow. So SMT is something else that you have to start using to for your daily biases. You have to use SMT, and I will make another video on SMT. I won't go over it right now. Well, I'll kind of briefly explain. So SMT is when you have correlated markets, like in the indices. You have the ES, you have YM, and then you have NQ. I'm sitting here constantly comparing these charts between all three of them because if one of those has already swept that liquidity, the other one does not have to go back down there and sweep that liquidity. Okay, so for this example, we have this previous week low. This low here, this candle, Dow Jones already came and swept the previous week's low. Not only that, here we also have SMT. So this low was swept as well. Okay. So we have two liquidities that were already swept. This low was swept by the Dow, and then this low here was swept as well by ES and the Dow. Now here's where the candles start, right? So we have the two lines drawn, previous week's low, previous week's high. If this low was already swept, what are the probabilities of the high getting the target now, right? So this was the sell program. Um, all right, this was the sell side of the curve, right? So now this here is the buy side of the curve, right? When do we start identifying the early stages of the buy program? Well, CSD, that's where it comes in. See these down close arrows? Candles. Once we close bullish above these, and so both of these are an order block. Both of these candles there, okay? Both of those candles are order blocks. But you can use this low one, the first one down here, as an order block as well, okay? We close bullish above it. That's the early stages of CSD. So what are we going to do? We're going to retrace back into it. Not only is this CSD, then you can also use um, this fair value gap as it, you drop into your lower time frames, use that fair value gap. You can use this order block. Um, we closed above this new week opening gap. I'm going to make a video on order flow. I'm going to make one on SMT, and then I'm going to make some other ones on like putting everything together, executions, etc. Then the most important, which is going to be time. Look for the times of the day and whatnot. So I'll just stay tuned. I'll make some other videos. But so I didn't trade today. I think it's the day before CPI. I can't remember what's the news. I don't trade the day before news, like high impact news or no news Mondays. Those are just some of my rules. So, anyways, this is CSD right here. I hope it makes sense. Not everything's going to be CSDs. You have to identify when your higher time frame is making sense. Like here, these are order blocks. That's how you start identifying when we're going into a buy program. This is the high. The algo targeted a high. It swept liquidity, and then it went into a sell program. Um, let's see, curve. So this part here is the sell side of the curve, right? And then what was the low? This was the low. We already swept it within the Dow Jones. So let's look at this. Let's just kind of look at this over here, okay? Let's see. Um, this is this was sell side. We swept the sell side, and we targeted buy side out here, up here. This is Tuesday. This is Friday over here as well. Friday. This is a previous week low. See, this is Friday, previous week low. We swept it. Then we're going to look for buy side. Right? So this is a low. So this is Friday's low. We came, we swept Friday's low, and then we're going to target a previous day high, which is Monday. This is buy side. This is CSD right here. We swept sell side. This is CSD. This is all an order block right here. If you want to be more early, this down closed candle, and then this one. This is when the market went into a buy program. Right? All right, so let's focus on, let's look at this time frame here. So we had SMT, CSD, so we already swept the previous week's low. Let's look to see what New York did. Let's zoom in right here. All right, so this morning we dropped into that hourly fair value. Well, actually, let me zoom out so you can see again. All right, this is the order block. All right, with the hourly fair value gap. Let's zoom in now. So we know we already have SMT, right? Now, if we zoom in here, let's see. You might not be able to see my other screens, but I'm looking for SMT as well. So right here we have SMT with the Dow. So the Dow did not take these lows. So we're keep in mind we're in that 1 hour fair value gap and hourly um, order block. So the Dow did not sweep these lows. So I'm immediately thinking, hey, we're in a buy program on the higher time frame, right? We sweep these lows. Stop bottom. Okay, so we sweep this. We close bullish above this bearish candle. So this here is your CSD. Okay? That's your CSD on the lower time frame. And you can target these highs here as your low hanging fruit. Okay? So you can enter even when it closed bullish. If you're not looking, sometimes whenever something goes into a buy program and it leaves these fair value gaps open, it's in a rush somewhere, right? So it doesn't need to retrace here. So once this is left open, it doesn't need to come all the way down here. If it starts disrespecting things, you can use other PD arrays for your entry. Okay? So like if it retraced down here, you can enter there, put a stop loss here. You don't need to put a stop loss all the way down here. You can go there and then just target the highs. Why? Because the algo is in a buy program. If it's in a buy program, anything on this side should be respected. Okay. If another thing is If it closed bullish like this, your entry could be here. So if it closed, this candle closed bullish, you can enter there. Just put your stop loss there, and then you can target this high. I hope that makes sense. A lot of times you will see a brief retracement to tag the order block. Another thing that I like to do is so I look at the left side of the curve. So like here, we sweep that liquidity. If we start closing above these candles here, then I know the order flow is changing. I'll make another video on order flow, but um, as soon as I start seeing like this side start getting disrespected, then I know order flow is changing and it's going to target these highs. So go ahead and look at your charts. Just test this out on your own. I hope all of this makes sense. Um, if you have any questions, leave them in the comments and don't forget to like the video and subscribe.